This is the best credit cards for beginners. And today I'll be talking about the importance of credit cards, the pros and cons of them, what factors to consider when you're choosing one, and then go into my recommendations on which card to apply for if you're just starting off. So credit card is a financial tool that allows you to borrow money from either a bank or a credit card issuer to make a purchase. And it acts as a short-term loan that you could use for everyday expenses. And the easiest way to access money from your bank account is a debit card. And when you swipe your debit card to pay for an item, actually it withdraws money that you already have from your bank account. But when you use a credit card, you don't actually get charged for the item that you purchased right at the moment. Rather, you get a bill from your bank at the end of the month with the total balance on how much you owe them. Essentially, you're taking a loan from a bank and you're paying them at the end of the month without any interest paid up to that point. But if you end up not paying what you owe entirely, then you get hit with the interest fee that added to your remaining balance. So what could be dangerous is that if you don't pay the balance for that month, you not only accrue interest fee on that outstanding balance, but you also accumulate interest on that interest. And that's the type of compound interest that you don't want. And in terms of pros, one of the benefits of having a credit card is to start building your credit score. And a credit score is essentially a measure of how trustworthy you are at paying with your loans. And when you consistently pay your credit card on time, your trustworthiness or your credit score in this case increases. And the lender in the future uses that credit score to determine whether to give you a loan or not in the first place. And they will also use that number to determine what type of interest rate or what level of interest rate you will get on that loan. So the higher your credit score, the more trustworthy you are, which means that they can actually charge you less on interest since they're more confident that you'll pay off what you owe. But if they feel like there's a less likelihood that you pay off your loans because your score is kind of low, then you actually could get a higher interest rate to compensate for the added risk. And they may even decide to reject your loan application if they think that you have a high chance of defaulting on your loans. And these loans include things like loans on a house or AKA a mortgage, even a car loan. And in some cases, credit scores are even used for rental applications for many landlords. And the second benefit is that credit cards often offer you with perks such as rewards, cashbacks, and travel benefits. And third benefit for any credit cards acts as insurance in case a merchant or suppliers don't end up delivering on the product and services that you actually pay for. And that's because you don't actually pay upfront with your cash. The bank actually ends up covering the charge first, and then you owe the bank later in the month. So you can actually look to dispute any charges if there are any fraudulent charges on your card. And as for the cons, credit cards again allows you to spend money that you don't have at the moment. And in that case, I think it's good to mention that you may be charged with interest if you carry a balance. So it's very, very easy to overspend and accumulate debt since any new user could lose track of how much they're spending for that month. And other cons is paying for additional fees like annual fees and late payment fees. So the biggest recommendation I have with credit cards is to always pay off your credit card balance every month. And in that case, interest rates don't even matter at that point because you're always paying on time. And you'll also reap the benefit of building your credit and increasing your credit score. And if you know that you're often tempted to overspend, I think it's totally fine to avoid using credit cards at that point and just continue to use cash and debit cards to save yourself from accumulating debt from unnecessary purchases and then destroying your credit score along the way. Not to mention, you'll also be increasing your interest rates on your future loans. And there are 4 factors to consider when you're choosing a credit card for beginners. One is the fee associated to that card. So check for any annual fees, late payment fees, or any other charges that the card has. And I'll honestly look for a credit card without an annual fee if you're just starting off. And for the second factor, I would look at APRs or interest rates that's a little bit on the lower end. And some credit cards allow you to have 0% APR, starting off at least, which is totally fine. But just make sure you understand when the interest rates start kicking in, and you want to make sure you could pay off your balance prior to that deadline. Number 3, look for a card with a manageable credit limit based off of your income and spending habits to ensure that you don't be tempted to overspend and not owe too much every month. And for number 4, look for a card with rewards and benefits that align to your lifestyle. If you like traveling, grocery shopping, Amazon purchase, restaurants, things like that. And if you are getting value from this video or enjoying the content so far, make sure to like and subscribe for more personal finance videos like this. And another tip I have is that you don't necessarily have to get a credit card from your bank that you already have. I think it's totally worth doing a little bit of research to pick out the best card for you that may be from your bank or just from another bank altogether. And the credit card that I recommend for any new beginner is the Discover It Student Chrome. And this is for anyone who's new to credit cards and have little to no credit history. Since no credit score is required to apply for this card, there's no annual fees and has 0% intro APR for the first 6 months, and then a standard variable APR of 18 to 27% afterwards. And you can earn up to 2% cash back on gas stations and restaurants up to $1,000 each quarter, plus 1% cash back on all other purchases. And as a sign-up bonus, Discover will automatically match all the cash backs you earn at the end of your first year. But the big downside I do want to mention is their poor international acceptance. So although this card doesn't charge for any foreign transaction fees, Discover as a company does have a limited acceptance outside of the US and may not be very ideal for paying for any international purchases, especially if you're considering traveling or studying abroad. Overall, I would say credit cards could be a valuable financial tool if you use it responsibly. So it's good to fully understand how credit cards work, their pros and cons, and choose the best card for your needs. And other than that, thanks so much for watching, and I'll see you guys in the next one.